Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the week of January 24th through the 28th. If you have not already seen part 1 of our weekly trading game plan for this week, how to make money from a bear market, we would highly recommend that you watch that video as we talk about several strategies that we're going to talk about in more detail in this video. How to use the inverse leveraged ETFs to play, make money in a bear market, etc. So again, we'd highly recommend that you watch part 1 if you have not already done so. And let's get started with part 2 of our weekly trading game plan for the week of January 24th through the 28th of 2022. Okay, let's start with making our updates to our weekly watch list. I'm on the stock screen in the online browser version of Webull. As always, you can find our affiliate link, get 2 or more free stocks with your copy of Webull in the description box below. And we'll start updating our watch list and looking at what's remaining in our watch list. Boyle is the long on natural gas, and again in part 1 you hear us talk that there was kind of an irrational decline in the price of natural gas. We would like to see this reach a support down here. You can see it sitting below a support level, but it's got a lower support level down here where this bottom is. When natural gas prices and Boyle bottoms and turns up, we would like to go long Boyle again. We made a very nice profit on this run-up last time, and we would love to do so and make even more again in the near future. So again, as soon as natural gas prices bottom out and turn back up, we want to go long Boyle. So we're definitely going to leave that on the watch list. BWEN, we're going to take off the watch list. You can see it broke down. It's a low float small cap. We're going to take that off the watch list and revisit, a number of these in the future if they stabilize and the market stabilize, etc. So as you can see, it's really easy to quick and easily update your watch list on the stock screen in Webull. We have another video, I'll put it in the description box below, about how to maintain a watch list in the stock screen in Webull. Real quick and easy again. We're going to leave Corsair Gaming on the watch list for this week. You can see even in the market decline, it is held up very nicely. It looks like it's coming back down to this support level. It had a nice run up. Even in the market decline, there's a gaming stock. We like this, so if it does hold this support, even in the market decline, we'll go long on Corsair when it reaches this support level and turns up. 3D Systems, we're going to take off the watch list. You can see it broke down through support. It's downtrending. Kathy Wood and Art K is now selling DDD, so another downward pressure. We're going to remove 3D Systems from the watch list for the time being. Okay, let's talk about DRIP. DRIP is the long, it's the bear inverse ETF on oil. And as we posted in the comments of last week's game plan, hopefully you saw that, we got stopped out of our long position in DRIP. We made a small profit, 3% or 9% for the year for the swing trade when oil turned back up. Again, this is the inverse, so it's the short position on oil. Congratulations to all of our fellow BeachBum traders who also made profit from this latest swing in the short on oil. And we're going to put DRIP back on our watch list to wait for another peak in oil. And when it peaks and turns down again, we're going to go long DRIP again. So we want to be able to add this back to our watch list. So show you again how easy it is to quickly and easily add something to a watch list in the stock screen in Webull. You just search for the symbol, hit the star. You can add it to any number of watch lists. You can see we hold this in the another watch list, our ETFs watch list. I just add it back to my weekly watch list, and now we can see drip. So again, it has run back up as oil declined a little bit, but we want to see if oil peaks again, drip comes back down. We will then go again long drip, which is again short on oil. GLDI we've talked about for a couple weeks. This is the Credit Suisse ETN on gold. Gold's been running up. It's up in the 1800s again, so GLDI has run up. It recently went ex-dividend again. This guy pays monthly dividends, a nice monthly dividend. We kind of thought it might drop on the ex-dividend date. It did not really. I'd really prefer it down in this 830, 828 area. So I'm kind of waiting for it to come down. We would really like to get back into this. We're still in SLVO, which is the silver version. And we'll see if we get that opportunity or not. If it keeps running away, we'll probably take it off next time. IMMR, you should have also seen that we have gone long on IMMR. We posted again that in the comments of our previous weekly trading game plans. So we're long IMMR. Again, this is a metaverse play, etc. Please see our due diligence video. I'll put that in the description box below as well. Again, it has declined since we got in, as many of your tech stocks have. Again, see our due diligence. The technical setup's not very good right now. You can see it broke down through support, as many of the tech stocks have. But you know, we like the reasoning, the justification behind IMMR in general as a metaverse play. So we're fine. We're not going to sell it. We'll be patient and wait for it to recover. If you like IMMR based on our due diligence and you want to get in, again, you have an opportunity if it stabilizes at the support or a lower support to get a better price than even we did, but we're going to take it off of our watch list as we're already long IMMR. KTOS is one we're also going to add to our watch list for this week. This is a new addition. It was in our bullpen in the past. It is an aerospace and defense company. They do drones. They do unmanned aerial vehicles. They also do, I think, waters. They're a government contractor. Recently, ARC has been buying. Kathy Woods has been buying this in ARC X. They're profitable. It's a big company. Another catalyst is these tensions with Russia and the Ukraine. May provide a potential catalyst for KTOS Defense. You can see down here is a recent bottom. It looks like it's declining towards that bottom again. If it does achieve this bottom again around this 1655 area and turn up, we'll go long KTOS. So again, that's an addition for this week's weekly trading game plan. Okay, you should also see in the comments from last week's weekly trading game plan that we went long QYLD, which is the ETF on the NASDAQ 100. They do covered calls on the NASDAQ 100. It pays a nice 11.78% dividend. Again, you can hear in our weekly trading game plans from last week what our rationale behind QYLD, why we liked it, why we wanted to get in. We wanted to park some cash long term. This is a very long term investment. We're in it for, just collecting the dividend and the upward trend in the NASDAQ. We believe, NASDAQ will eventually reach a new all-time high. It always does. And again, this is a very long-term investment for us. We're going to sit and collect the dividend and wait for the NASDAQ to, trend upward again. which we believe it eventually will. May not even be this year, and that's fine because we'll just sit and collect this dividend. We've got just some money, some cash parked in QYLD. So again, you can listen to our rationale from last week's trading game plan, and you can see you have a better opportunity if this stabilizes again. Wherever that bottom may be, if you want to get in QYLD, you can get a better price. This doesn't have a lot of price range, so we're not in it again for price appreciation. We're in it just to park some cash, collect dividend, ride the upward momentum in the markets, and we'll talk about another one, BTI, in a minute. So for now, we're going to take that off of our watch list. We're going to leave Roku on our watch list. I know it's gotten, hammered with the decline in techs. All the streaming services got hammered when Netflix reported weaker than expected subscriber growth. Again, you can listen to our due diligence video we did in the past on Roku and why we think that Roku is different from your Netflix and your Disneys and your other streaming services. So we would highly encourage you to listen to that due diligence video. We still like Roku. We're looking for it to stabilize down in this next support level down at a 139 area. If it does stabilize at this support and turn up, swing back up, we're going to go long Roku. We still like Roku. And again, listen to the due diligence video. I won't go into those details here again. Skills, you'll see skills broke down. Kathy Woods, Art K is now selling skills. So again, more downward pressure on skills. We like skills. Again, we have a due diligence video out on skills. You can go see that, but right now, because it's just breaking down and there's downward pressure, we're going to remove skills. SVXY, we've talked about, in part ones, etc. This is the short on the VIX. We have a buy sitting out at a lower level. If we zoom out a little bit, we'll see this 48.54 level, which was the previous bottom, which corresponds to the last spike in the VIX. We've got that buy sitting there. We're just waiting for this peak spike in volatility. We might get it this week, might not. We want to watch this for a bottom. If we don't get that peak and it does a bottom and turn, we want to catch that. So we want to have SVXY on our watch list. UVXY is the long on the VIX, and so it's the inverse of SVXY. You can see it's already run up. We leave it here primarily to be able to watch this inverse. Sometimes it's easier to find the top on the long version versus finding the bottom on the short version. So we leave that on there, but again, we don't really plan on initiating a swing position in UVXY at this time. And we're going to add VTI back onto our watch list. We've had a long position for a short period of time, and we got stopped out when the market turned down. So let's add VTI. VTI is the total market ETF, so it's not just dependent on just the S&P like VOO is. It's even broader. I think it covers like 4,000 stocks or something. So again, it's going to be even more stable than VOO, which is just on the S&P 500. Again, we started a position, got stopped out when it broke down through VWAP again. Pretty much break even at that point. We are looking for a lower level to get back into VTI. Again, this is the total stock market. It pays a small dividend. Again, would be a very long-term investment to park some cash to ride the trend in the overall market. Again, we believe the U.S. stock markets over the long run are going to go up. So this is a good one. It's a very popular ETF to ride the market trend up. And again, we just want to park some cash. I know the dividend's not that great, but we'll just, ride the trend up. So again, as soon as this stabilizes again at a support level and turns back up, then we're going to go long a chunk of cash in VTI and just, leave it there and let it ride up. This could be a source of funding in the future if we wanted to liquidate something to get some cash to put in something else. We could always grab it out of VTI. WYY is another one of these low floats, small caps. It broke down. Again, in a risk-off market, these kind of low float small caps, I just don't see any justification for staying in or trying to get in at this point in time. So we're going to take WYY off of our watch list. So now let's clean up our bullpen, and we'll talk about some strategies going forward, how to play a bear market, other ways to make money. Okay, so now let's talk about and clean up our bullpen. In this downturning market, it's a risk off, so pretty much, we want to clean up and start rebuilding our bullpen, and we'll talk about a change in strategy going forward. But a lot of these that were not profitable, they broke down, as you can see. So I'm looking at now my bullpen watch list. It's easy to have multiple watch lists in Webull. Again, just a reminder, you can get 2 or more free stocks with your version of Webull from using our link in the description box below. But again, we're going to clean these guys up that are not profitable. They're not likely to do well in this risk-off market. So we're going to take AQMS, CARB, and RKDA off of our watch list. They all broke down, as you can see. They just broke through support, trending down. So we're just going to start cleaning those guys up. Unfortunately, we like CARB. It's a bank. It's a minority bank. But again, it's just breaking down. It's not profitable. So there's just no justification for the risk at this time. We're going to leave Grow. Grow is a investment company. They also have investments in cryptocurrency. We're going to leave it. We'd like it at a lower level. We'd like to get it cheaper. If it does stabilize, we'll leave it on our bullpen and keep an eye on it. POW we talked about last week. This is kind of odd that it is downtrending. I believe they're profitable. It's an ammunition stock. If it does stabilize, we'll take a look at it again. So we're just going to leave that on there. TMF and TYD, we talked about part 1, that we're waiting for a bottom in treasuries. We believe this may not happen until the Fed completes their tapering, which will probably be in March. So it's in our bullpen. We're just kind of waiting for the bottom in treasury prices, and then an opportunity to go long on treasury prices again. But this is just in our bullpen. We're just waiting for that bottom. Again, may not happen until the March time frame. Beyond, that was Dutch Telecom, and it broke down through support. It's downtrending, and they have high debt, and the high debt is also with increasing interest rates, etc. is a negative. It's a risk on Vion, so we're going to take that back off and maybe revisit sometime in the future. Yalla we're going to leave on the watch list. Surprisingly, Yalla, even though it's kind of a tech stock, it has held up quite nicely in this downtrend. It's been flat lately, so it's questionable, which direction it's going to go, but it is holding this support. If this guy swings up, there may be an opportunity. So for now, we're going to leave Yalla on our bullpen. and we'll see if it swings up. We may go ahead. They are profitable. They're in a global market. They're in the UAE, etc. So if we see a flow of money going into other global markets, we might see an upturn into YALA. And if so, it may be worth a long position. I also saw they cleared up a lawsuit. That may be a catalyst. So again, we're going to leave it on the bullpen. We'll look at it on kind of a daily basis and see if it warrants moving up to our watch list. So now let's talk about shopping lists. You know, what do we want to buy, or what strategies can we use going forward in this bear market, in this downtrending market, whether it's actually a bear market or not. It's not really that important. How do we make money in this market? So we'll talk about some strategies for how to do that in just a second. Okay, so let's talk about some strategies. How do we make money in a bear market or a downtrending market, or at least protect our portfolios, our capital? And a message I just want to send, and in reality, this is one of the primary reasons why we started this YouTube channel, all these videos, etc., is to share our experience and hopefully help people make money, not lose money, etc. And one of my primary messages to people is don't panic. And again, we're not financial advisors. This is not financial advice. This is our opinion, and this is for educational purposes only. But again, one of our primary messages is don't panic, don't overreact in either direction. And a message that I've always tried to send too is you only actually lose money when you sell at a loss. If you're still holding a position, if you still own the stock, you haven't actually lost cash yet. You lose when you sell. And if you're just another one of my primary messages, and you'll see this in social media if you catch me in a chat room or whatever, one of the things I post a lot is patience pays. So if you wait, things tend to turn around. They tend to swing back up. If you don't panic and sell at a loss, and eventually you'll at least recoup your capital, if not make money. More often than not, you end up making money. So again, just a message, don't panic, be patient, etc. Again, I think last week we talked about the fact that if you were stuck in one of these life cycle mutual funds in your 401k and you had the opportunity to move that to cash, that probably was an opportunity. Well, my opinion, again, this is just opinion, is now is not the time to liquidate one of those mutual funds, because they're probably down, 5, 10, 15, 20%, and that's what we have seen. We've been through the internet bubble of the 2000s. We've been through the Great Recession, 2008, 2009. We've been through the pandemic, and where people really get hurt. And again, this is what we're trying to do with these videos, is keep from people getting hurt. Is when they panic, they sell, then that they lock in that loss. And that's where people lose, 30% of their 401k, and that hurts them financially. And we don't want to see people get hurt. So again, I just want to convey that message. Don't panic. Be patient. The markets do eventually recover. You can see in part one, we talk about how long these bear markets can last. Sometimes they're short, sometimes they're longer, but again, if you're patient, eventually they have always recovered. Now, when we talk about longs, again, we're not rebuilding a lot of our bullpen right this second, but in a second we'll talk about, how do we rebuild our shopping list, rebuild our bullpen. We're waiting for the extreme, the peak fear. And again, in part one, we looked at the fear index, and we're not there yet. We need to wait for that capitulation, that peak fear, that bottom. Nobody's going to know when that is. You're going to know after it happens, because it's going to bottom. You're going to see that capitulation spike down at high volume, and then you're going to see a turn back up. Now, how long that takes, again, nobody's going to be able to say until after it happens. So how do we make money? Well, okay. Essentially, we need to flip our mindset. Instead of looking for, longs where we're bottoming and turning up, we want to, flip our mindset and how can we make money as things, peak up. We're going to see some rebound rallies, and they're probably short term, but then things are going to trend down. If we're in a downtrending market, we need to be looking for those peaks and then going essentially short, right? So, flip the charts, flip your mindset, and start looking for, okay, when things peak on a short-term rally and turn down, then how do you play those on the downside to make money? And there's going to be plenty of opportunities along those lines for shorter-term time frames. Again, you can do swings, down to up. So when it turns down, you go short, essentially. And you wait for it then to bottom, which would be the inverse of a peak, and then you get back out, right? Because it's going to rebound. So again, you make money. We can make money in any market. It's just a matter of mindset, direction, knowing how to play. If you're a day trader, a shorter term trader, you can do this on a scalping method. You can look for downside momentum, and again, you can short going down. You're looking for a momentum and increasing momentum going down versus where people have been conditioned in the past couple of years looking for momentum and breakouts going up. Now you want to look for momentum and breakouts going down. So again, you just flip your mindset, play it the other direction. If you got to flip the chart upside down, that's one way some people do it, and it works. It's the same patterns, same strategies, etc. It's just the other direction. In part one, we talked about these inverse ETFs. Now, if you're in a retirement account, you can't short individual stocks, but you can use these leveraged ETFs to play indices. You can play. We talked about how to play the indices going down. We talked about commodities, the treasuries, global markets, etc. So again, we can use all these strategies going on the downside using these leveraged ETFs in a retirement account. So I hope that helps. It gives you some strategies. I hope it gives you some peace of mind. Again, we can make money in this market. We just have to flip our mindset. Don't panic. Be patient, etc. Use these strategies. Flip our mindset. We can make plenty of money. Now in a second, we'll talk about, okay, what is one way we can rebuild our shopping list, etc. Okay, I also wanted to talk about another strategy that if you want to play individual stocks, either on the downside or another way to reduce the volatility in your portfolio is by using beta. And we last talked about how to find individual stocks based on beta back in September. You can see our video back from September, how to profit from the September effect, where we walked through how you can use the FinBiz screeners to find stocks with various beta values. So I'm not going to repeat that process here, and I'll leave the link to this previous video in the description box below, and maybe I'll cut that piece out and do a standalone video in the future. But please go back and see how you can find stocks based on beta in FinBiz from that previous video. So why would you want to look at beta? Well, let's just talk about how beta works. If beta is positive, then it's going to move in the same direction as its market or index. So if markets are going up, the stock goes up. Markets going down is going down. So again, positive beta, it moves in the same direction of the market. Now, if we're talking about retirement accounts where you can't directly short individual stocks, then in a downtrending market, we want stocks that are more likely to go up when the market goes down. Well, then we want to look at a negative beta, because a negative beta says it moves in the opposite direction of the market or index. So in a downtrending market, a stock with a negative beta is more likely to move up. So again, now you can take a long position on a stock that's more likely to move up when the market's moving down. So again, you can see our video. Here's how to find stocks that have a negative beta if you want to find individual stocks to watch that are going to more likely move up when the market's moving down. Now, another useful factor of beta is you can use this to reduce the volatility of your portfolio if you would like, because if a stock has a beta that's around 1 or greater than 1, it's going to move faster than its index, and this is the absolute value, so positive or negative. If it's greater than 1, it's going to move faster than its index. If it's less than 1, it's going to move slower. So less or slower than its index. So again, if you want to reduce the volatility in your portfolio and you want to find some stocks, individual stocks that are going to dampen the volatility in your portfolio, you want to look for stocks that have a beta absolute value of less than 1. The smaller the beta, the less it's going to move as the index moves. So again, we hope this helps. Beta is, again, another way you can use individual stocks. You can play either direction. You just know, what value of beta are you looking for, and then what's the absolute value, the magnitude of the beta. Do you want something that moves faster than the index or something that moves slower? Obviously, if it's got a greater than 1, it's going to be more volatile than the index. If it's less than 1, it's going to be less volatile than the index. So again, this is another strategy, allows you to adjust the volatility in your portfolio. If you want to reduce the risk, reduce the volatility a little bit, you can tune the overall beta of your portfolio. And there's even funds, and I don't know, there's probably ETFs that are high beta, low beta, etc. That focus on these factors. So we hope that gives you another strategy to use if you want to play individual stocks in any market, down, up, bear, bull, etc. There's ways to make money in any market. That's one of our primary messages. We hope this all helps. We hope you like this video. Please smash the like button to help the YouTube algorithm. Share this video and all of our videos with more of your fellow BeachBum traders around the world. If you're not already subscribed to our channel, we hope that you will choose to do so. Please ring the bell icon to be notified of all of our future videos. And please share this video with your fellow traders around the world. And again, let us know in the comments below these videos, what do you think? How else can we help you be successful in your trading? How can we improve our videos? Let us know how we can help. We are here to help. So we do hope this all helps. Good luck and have a great trading week. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel. And please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.